All right, today we are digging deep into a company that's shaking up one of the oldest industries on the planet. We're talking about Epiroc. Now, on this surface, they're a giant in mining and infrastructure. But if you peel back a layer, you might find something that looks a lot more like a high-tech company. So the big question is, what's the real story here for an investor? So check this out. This quote is straight from management, the culture of a 150-year-old startup. I mean, think about that for a second. How can a company with roots that go all the way back to 1873 possibly act like it was born in Silicon Valley? And, for us as investors, what does that really mean for the bottom line? Is this just clever marketing, or is there something real here? To figure that out, here's how we're going to break it down. First, we'll cover what Epiroc actually is. Then, we'll dive into its real moneymaker. After that, we'll check out the future tech they're building. And finally, we'll get to the big one. Is the stock worth the price? We'll wrap it up with the full bull versus bear case. Let's go. Okay, so Section 1, what is Epiroc? You can't really get where a company is headed until you know where it's been. And for Epiroc, its family tree, well, it's everything. So at its core, yeah, Epiroc builds the heavy-duty gear for mining and infrastructure. But the real story is its DNA. See, it was spun out of Atlas Copco back in 2018, and if you know anything about industrial companies, you know that name is legendary. That means Epiroc wasn't just born, it was engineered from day one with this incredible culture of financial discipline and operational excellence. It's literally in their blood. All right, let's get to the really interesting part, the part that honestly separates Epiroc from the entire pack. We're talking about its secret weapon, what I like to call its resilient aftermarket engine. Okay, I want you to just focus on this one number for a second. 68%. Let that sink in. This single number right here, it's pretty much the entire key to understanding why this company is so special. So what is that 68%? That's the slice of their revenue that comes from the aftermarket. We're talking services, spare parts, consumables, all the stuff that keeps the machines running day in and day out. It's like the razor and blades model, but for giant mining drills. It means almost 2/3 of their business is stable, recurring revenue, not the wild boom and bust cycle of selling shiny new equipment. Now, as an investor, this is huge. This is what you're looking for. It means while their competitors are getting tossed around by the crazy waves of the mining cycle, Epiroc has this incredibly stable, high-margin bedrock of cash flow. It is a fantastic defensive moat that just keeps printing money, giving them a resilience that's hard to find. But here's the kicker. They're not just sitting back playing defense and collecting checks from that stable business. No way. That stability is the launchpad for the really exciting part of their story, leading the twin transformations that are about to completely change the future of mining. Look, mining is always going to have its ups and downs, right? Those are the cyclical tides. Commodity prices, global growth, all that stuff. But what's happening now is totally different. There are these huge, unstoppable currents running underneath everything. We're talking about two massive long-term tailwinds: technology, like automation, and sustainability, which means electrification. These aren't just trends, they're fundamental, structural shifts. And this is exactly where Epiroc is going all in. They're not just selling big, dumb machines anymore. They're selling intelligence. They're selling entire ecosystems. Think about it. Fully autonomous mining fleets, battery-powered vehicles that make underground mines way safer and cleaner. They're even getting creative with stuff like battery as a service to help customers make that leap. It's a whole new ballgame. And hey, don't just take my word for it. This isn't just some PowerPoint fantasy. The proof is right there. They just landed a monster contract with Fortescue, one of the biggest miners in the world, to supply a fully autonomous and electric drill fleet. That is a huge stamp of approval. It tells you the biggest players in the game are buying what Epiroc is selling. Okay, so let's pause for a reality check. We've got a super resilient business model plus a massive growth story. Sounds amazing, right? But you know what that usually means? A high price tag. So we have to ask the tough question. Is the stock just too expensive? I mean, this is really the heart of the matter, isn't it? The market clearly sees how good this company is, so it's not cheap. Is Epiroc's quality actually worth the premium price that investors are paying for it today? Let's find out. All right, let's pull up the numbers. If you just look at the classic price-to-earnings ratio, yeah, Epiroc looks pricey. It's trading at almost 29 times earnings. You compare that to its rivals, Sandvik, Caterpillar, Komatsu, and they are all way, way cheaper. Your first reaction might be, whoa, That's too rich for my blood. But hold on. The PE ratio doesn't tell the whole story. You have to look at how good a company is at making money with the capital it has. That's a metric called return on capital employed, or ROCE. And this is where the picture gets crystal clear. Look at that chart. Epiroc's ROCE is 27%. That completely blows its closest rival out of the water. It's not even close. This proves they are just a fundamentally much, much more profitable business. And that right there is the whole premium for quality argument in a nutshell. People are willing to pay more because they're not just buying a mining equipment company. They're buying a best-in-class industrial leader. It's more efficient, it's more profitable, and the market rewards that kind of performance. So, where does that leave us? With all that in mind, it's time for the final verdict. Let's stack up the full bull case against the bear case and see how it all shakes out. Okay, so the bull case, the argument for investing, is pretty powerful. First, you've got that incredible aftermarket business acting as a defensive cushion. Second, they are the clear leader in the tech that's going to define the future of this industry. Third, the financials are just stellar. We saw the margins in that ROCE. And to top it all off, you've got great management and a major investor who's in it for the long haul. It's a very compelling package. But let's not get carried away. The bears, the skeptics, have some really good points too. That high price tag, it leaves zero room for error. They have to execute flawlessly. And yeah, that aftermarket business is a buffer, but a truly nasty global recession would still sting, no question. All that futuristic tech they're betting on, that always carries risk. And let's not forget, their competitors aren't just sleeping, they're innovating too. So in the end, it really boils down to one single massive question. Epiroc has clearly built this incredible high-tech moat around its business. But is that moat strong enough to justify paying today's premium price, knowing that the industry's brutal cycles will always come back? That, my friends, is the multi-billion-dollar question you have to answer for yourself.